Welcome to the J.D. Levy and Associates Calibration Point podcast. Our podcasts are designed to bring a conversational exploration of key topics that we believe will provide value and insight to those serving in the nonprofit sector. We will highlight new developments in the field, latest research, and things we're learning from our own clients that we can share. If there are topics that you would like to see explored, please send them to us through our website at jdlevyassociates.com.
Welcome, everybody, to this month's podcast of the Calibration Point podcast, and excited to have an interesting topic. And we're going to focus on why the donor receipt can make or break your organization as a nonprofit charitable entity. And we have a special guest whose name is Wes Terry. Wes has an MBA in finance and is a CPA who also has an expertise and specialized focus in the nonprofit organization. And he also is a former federal auditor and brings a lot of interest in this area about how the donor receipt has such impact, in some cases, even on survivability of a nonprofit organization. So Wes, we've kind of beefed up this topic of the donor receipt, and I think it is all well ado. Help us on this journey. Why do you see the donor receipt as such a major issue?
Sure, thanks, Jimmy. So there's two big reasons. One is a compliance issue. It is required by the IRS. And the other one is the relationship piece. So there's both the soft and the hard skills here that can make or break an organization. The biggest one being the compliance piece. So I'll talk a little bit to that and then kind of pitch it back to you because I know the relationship piece is more in your wheelhouse. The compliance side of things. So there have been multiple court cases that have upheld that if a donation receipt is not contemporaneous, and it's not hitting the 3 or 4 major areas or documents that the IRS wants to see on that receipt, that they can challenge that for individual donors and for grantee organizations even as to what the validity of those receipts. And so multiple court cases, the Albrecht case was a recent one that came out where they basically disallowed thousands and thousands of dollars of donated items because of one key phrase that we'll talk about here later that was not on the contemporaneous receipt. So it can be any one or multiple aspects of this donation receipt that the tax courts can challenge. And we're starting to see that more and more.
And you said it's what?
Contemporaneous, meaning that if they do not get it in real time, I can't go back during an audit. If the IRS is challenging me, I can't go back during an audit and ask for a new donation receipt. So it has to be sent in real time. Now, that can be a little bit of a gray area. Real time, once a year, is generally upheld as acceptable. We've got some organizations now, the relationship piece would argue that you don't just do it once a year, but once a year is generally acceptable. If you get out past that, then they would start challenging the idea of whether or not it was contemporaneously sent.
So let me ask you a question on that. I know you're going to get into it. So we know in the field from just research and practice, et cetera, that a donor thank you that comes after about 48 to 72 hours starts to increase the potential for negative effect on the relationship. Having said that, that typically isn't a formal IRS receipt. It's a outreach from the organization to say, hey, Wes, thank you for being a part of us. It might be a handwritten note. It might be a phone call. What you're saying, though, right now is that there needs to be the formality in the receipt also has to be received within the calendar year that the donor made the gift and make sure that it's got all the pieces of the puzzle in place that you're going to tell us about.
Yeah, absolutely. So the immediate receipt that you're sending can be dual purpose. It can be the compliance piece and the relationship piece. And so that if you're trying to do that, then you want to make sure that the compliance aspects are covered in that. If you're just doing it for the relationship piece, then the main thing you want to do there is at the end of the year, then send out a formal tax receipt and make sure that all of the aspects that need to be covered are included on that tax receipt. Some people do both. Some organizations do one or the other. It really comes down to what your capacity is inside the organization and what the purpose of those immediate receipts are versus the year-end receipts. The year-end receipts are typically less personalized. They do less from a value or from a relationship perspective, but they meet the compliance requirements. But again, you can do it on both sets of papers as well. You don't have to just do it at the end of the year. I always encourage to do one at the end of the year, just because that becomes your formal tax receipt, and people are always gathering their documents for their CPAs and for their tax preparers at that time. So it's convenient for your donors.
So clearly there's a distinction, and clearly there's a lot riding on the year-end receipt that you've just talked about. Disallowed donations, the impact that it has on even, I guess, how you would receive future donations, and whether you even exist as an organization if all of a sudden your donations are disallowed. So tell us then what needs to be in the receipt. And there's so much, kind of myth in the field, right? About, well, you just need to say this or say that. I mean, you're the expert. So what do we need to be sure that we're actually including in this donor receipt?
Sure. Yeah. So you don't want to be the organization that's on the front of the Wall Street Journal because you failed to give a donor an appropriate receipt. Okay. The damages to your image in and of itself in that case can be far reaching. One, you're going to for sure damage the relationship with that one donor. Two, if other donors see that, then they're going to start questioning the validity of their donations to your organization. And so this can be far reaching outside of just the one donor that's impacted, that's having their actual donations challenged inside the tax courts. So some things to include on that. So compliance wise, one, the IRS requires this. If you're not sending donation receipts, then they can challenge your compliance with being a 501 organization. Okay. And so that's issue number one. Issue number two, to make these receipts again valid, we have two things. One, it's contemporaneous, and two, it has to include the key aspects. What they're looking for on these receipts: one, that the organization name and federal ID number are disclosed. Two, that you're acknowledging the gift itself. So what was given? Is it a cash receipt? Is it an in-kind gift? Was it a car that was donated? In the case of the Albrecht case, it was actual Native American goods that he had collected that were donated to this organization. And so a clear description of the gift is required to be on there. One other thing that I like to include is the date of the gift. And so just acknowledging that it occurred during that tax year on this specific date. And then the third thing, and this is the most important one, and the one that this is what actually got the Albrecht case completely thrown out. They disallowed his donations because of one statement that was not included. And the statement is that no goods or services were received in exchange for this donation. That is absolutely critical. And what they're looking for there, and you're seeing this even with donations to our universities now. If I donate to a university and I receive preferential seating for football games or basketball games or things like that, the IRS has challenged that for years and started winning those battles. And that tax reform all has recently occurred to where they can challenge, if you're getting a preferential seat at a football game, there's value being given.
Get out.
They can actually disallow those donations to varsity clubs and things like that at universities. So this is a really, really big deal. And so what we are certifying is that we did not receive anything, or that we did not give the donor anything in exchange for his or her donation. And so that is the most critical statement that needs to be on every donation receipt.
Wow. So what happens then how do you differentiate relational care and preference to a donor and saying, hey, Wes, we're glad you came tonight. I want you to sit up front with me, and, maybe I'm the executive director or the board chair, and we've got a great spot up front, or in the box over here, if it's a theater. How does that get differentiated as to where's the line? Is there a way for an organization to know or to raise awareness, say, hey, we really need to gut check what we're doing because it could potentially be misinterpreted? And here's what I'm wondering, Wes. So let's say that I say you make a donation and I have on my receipt, no goods or services are received, but you come and let's say that I'm the executive director, and you're an engaged donor, and I want you to sit in a special spot in the theater that's more reserved area, and I just take you and have you sit up there with me because just in our relationship. What I'm hearing you say, though, is I probably need to start to gut check how apparent or visible or even how unintentionally I'm doing things, because the IRS could potentially even challenge that if they wanted to start to separate hairs on this.
Yeah, it's a really gray area. And so the challenge is, with a varsity club or things like that, it's an exchange transaction. When you donate,
Okay, I gotcha.
Preferential treatment in those seats. It is understood. And so if you are caring for your donors, we start talking about tiers of donors. If we're segregating our donors and taking extra care of our top donors, I don't think that is going to be enough of a distinguishment. It's not an exchange transaction. It's a a relationship transaction. And so it's going to be really hard for them to challenge that. I'm not saying that they can't. It's their prerogative. If they want to challenge that, they could definitely try it. But that is definitely a gray area that we do want to be cautious of, but not let that impede our relationships either.
Yeah, I think it's a really good point, that just some organizational awareness, because I know for a fact that there are a lot of things that happen out of just kind of propensity that are probably pretty far on to the gray side, based on what you're saying. And again, it's typically done, and not just by way of when we talk about a tier 1 donor, which can be someone who's giving at a certain level or someone who's been a part of the organization for a certain number of years, as an advocate. And the impact of that non-deductibility could have more effect on someone who's given at a higher level, of course, depending on what they're doing with their taxes or how they're claiming it. But it sounds like this could be something we've got to really pay attention to, just in our organizations, especially if there's an exchange aspect to it.
Yeah, we need to be aware of the exchange transactions. That's the piece that we got to be cautious of. If you donate this, then you get that. Then it becomes an exchange transaction, and they are receiving some form of a value in exchange for that transaction or that donation. And that's where the IRS is starting to crack down on that, and rightfully so. That's not truly a donation. Then at that point, you're buying something essentially, and so that's the piece of that. Now, again, we've talked a lot about the compliance side of things, but I don't want, and we're starting to kind of lead into the relationship piece.
Right.
Again, these donation receipts, these contemporaneous receipts, they do not necessarily have to be the end all be all, the only thing we send out to donors. They can be very sterile, and we don't want to send out a sterile letter to a donor and not manage that relationship. That can do more damage than good. And so, Jamie, this is your world. What do you see when I send a donation receipt out during the year? What do you see as ways to personalize that in a way to further that donor relationship and not just be a compliance piece?
It's a good question. I mean, I think the baseline standard ought to be understanding, as personal as possible. So depending on volume and, is this person someone who's been a part of our organization for a certain number of years, and where does that fit them within our tiers that you talked about, and or a giving level, or how frequently they're supporting the organization or volunteering, et cetera, those factors. But I always say make it as personal as possible. And so if I can do a quick phone call and say thank you, the research shows that when a board member jumps in and makes a phone call thank you to a donor, that person's individual giving will increase by 50 to 56% in the following year, even with nothing else changing. Then the other is also just a handwritten quick card. And the one thing that's making a resurgence now, Wes, that I've been surprised at are 3x5 postcards. For a while that was kind of dead, and now, like the last couple of years, as it relates to relational impact, those quick little postcards have a pretty big impact, and just getting those out. Now you got to look at whether it's handwritten and does it qualify for bulk anymore. But even if it's first class, it's still a simple way to send something out to someone. The other kind of the more technical front that I really like, and there are really good platforms for this. One is Gradavid, and they are video-based thank you programs. So I could record just a very quick, off my computer or whatever that might be, thank you message to you, and then immediately pop it into an email. And it would go right out to you based on a pre-framed kind of package that I've created. I think the but at the end of the day, it's as personal as possible and finding creative ways to do that. Now, what I have not seen, which would be interesting, is I haven't seen much happening on just quick audio thank yous. We kind of jumped from the letter and the phone call, which is still audio, but to the video, but not like a recorded, 50-second thank you. But what we do know is that voicemail thank yous, like if I were to call you, maybe I'm a board member and I'm kind of nervous about calling donors and talk to them. So I'm going to call you when I think I'm going to get your voicemail. And I'm just going to leave a message. But what we know is it's kind of 50-50 on whether talking to you in person or leaving you a voicemail message has more impact on the relationship, because we know they both have major impact on the relationship. So those are some of the things that we're seeing.
Yes, that's the two sides of the coin here. These donor receipts are critical both from compliance and from the relationship piece. And so kind of one other aside that I always like to comment on, this is more from the CPA side of things and just words of caution. So something to be aware of as an organization is be careful to know that on in-kind gifts. So I talked a lot about the cash gifts.
Right.
In-kind gifts, we are not a valuation organization. We're not required to disclose a value for in-kind gifts. We're required to disclose what the gift was and have a clear description of it. We could even go as far to say, hey, here's an example of a Kelley Blue Book for a car similar to yours. And you can include that, but you should put on there that we are not certifying the value of this vehicle or this in-kind gift. And you should consult with your tax professional to figure out what the fair deduction is going to be on that gift. And so that's something else that I always encourage, and kind of words of caution there. If you put a value on a donation receipt, you are certifying as an organization that is the fair market value and that is the deductible value.
Wow.
For their taxes. And so again, now stock gifts are a little bit unique. There's a clear parameter and clear description of how you're going to come up with that calculated value. But even that, I always caution that, because as an executive director, that stock has to first go to my investment company and then come to my cash account if we liquidate it immediately. The amount of money that we get in our cash account is not necessarily the amount of money that our donors get to deduct. And so again, even with stocks, be cautious of that. You might see cash immediately and think that's the fair market value that they get to deduct, but that's not always the case if that took 2 or 3 days to transact. So just be aware of that. I always caution against in-kind gifts. Be very clear on what the gift was, the dates you received it, the type of condition of the gift, those types of things. Be sure you still are sending the contemporaneous letter. Be sure that you're still disclosing all those other things that we have on a cash gift, especially that part that says no goods or services were received in exchange for this donation. That's still critical. But just be cautious about valuing non-cash gifts.
Wow, that's great, Wes. And I think we've definitely brought the picture of how the donor receipt can make or break the organization. And I just have to put it out there. Wes received no goods or services as being a part of this podcast show today. Wes, we appreciate your time, and as always, super informative. Hope you enjoy your afternoon.
Thank you. You too.
Thanks for listening to the J.D. Levy & Associates Calibration Point podcast. If you have comments or ideas for future episodes, please reach out using the contact page on our website, jdlevyassociates.com.